This is the FlipNerd.com Expert Real Estate Investing Show, the show for real estate investors. Whether you're a veteran or brand new, I'm your host, Mike Hambright, and each week I bring you a new expert guest that will share their knowledge and lessons with you. If you're excited about real estate investing, believe in personal responsibility, and taking control of your life and financial destiny, you're in the right place. This is episode number 318, and my guest today is Joakim Mortensen from Colony American, a large national lender that just surpassed more than $2 billion in loans against real estate. Now, financing is the key to growth for every real estate investor. And today we talk about a number of things that will help you get access to more capital to either start or grow your real estate investing business. We talk about how lenders will evaluate you personally, or if they will at all, how they'll look at your experience or lack thereof, and how they'll evaluate the asset or deals that you're trying to fund. We also discuss what you should look for in terms of evaluating what lender is right for you, as well as where Joakim sees the market going from here. Not every lender is equal, and not every lender is somebody that you want to work with. Can they serve your needs? So if you're looking to get more access to funding, to do deals, to grow your business or start your business, you don't want to miss today's episode. Please help me welcome Joakim Mortensen to the show. Joakim, welcome to the show.
Thank you very much, Mike. Great to be back.
Yeah, glad to have you. So you were on about a year ago, which was for us was like 80 episodes ago or so. So yeah, that's like dog years. It's like 7 years ago. Dog years. So
that's right.
But so glad to have you back. And financing is such an important part for every real estate investor. In fact, before we started recording here, you and I just had a discussion about my situation personally, talking about some financial options and stuff like that. So we know that financing is the key for any investor to grow their business. I mean, leverage is a huge part of this. Is I want to say it's everything, but it's a huge part of this industry, right?
Yeah, no, absolutely. It's we exist to obviously to amplify people's buying power, but also boost the return on equity. So I think we're a key component and a key partner in helping people grow their business.
Yep. Awesome. Well, hey, before we get started, for those that don't know you, maybe didn't see the last show, give us your background. Tell us a little bit about you.
Yeah. So I am with Colony American Finance. We started this venture about 2.5 years ago. I'm proud to say that last week we hit a $2 billion mark, financed more than 20,000 homes, and done business in 42 states. And I am the chief client officer, and we have a fantastic organization. I was employee number 6. Now we're up to 62. So it's been very, very busy and very fast, and it's been very exciting to be part of.
It's an industry. It's an interesting industry. The way that it's evolved over the past few years, it has more of just a more kind of institutional flair, right? It used to just be mom and pop, hard money lenders in every town in America that only operate in their small bubble. But maybe you take a couple of minutes and just kind of share where things have gone over the past few years.
Yeah, no, it's we talk about this asset class being institutionalized, and that obviously what kind of the catalyst was all the big funds coming in, buying up rental properties. But the reality is the mom and pop investors have been in this segment for many, many years. And Moody, the rating agencies, did a study and identified that there's 15.4 million rented residential assets in the U.S. And that's, if you think about that the institutional buyers maybe bought a few 100,000. It's incredible to think that this market, how big it is, and how we're now getting resources, capital, technology attracted to the industry, and we're kind of becoming a household name within the commercial real estate space.
Yeah, it's interesting because I think you'll know the stats on this better, but around 1 in 3 homes in America is owned by an investor, right? It's not their primary residence. It's probably something that they rent out. That probably includes multifamily, but does that sound about right?
Yeah, I think I think that that's in line with what I've heard as well, and it is incredible because as we see, homeownership is obviously still a challenge for many people, and that gives people who rent residential asset an opportunity to provide a home for a family who wants to rent, and to the extent rents are comparable if you live in an apartment or if you want to rent a house, and oftentimes a young family would probably prefer a single family over living in an apartment complex.
Sure. Yeah. And I think that's what we saw in the last kind of downturn was a lot of people that maybe lost their home when they had to go back to being a renter, they didn't necessarily want to go back to an apartment, right? And we kind of made single-family homes more appealing as rental properties than maybe in the past.
Yes, and listen, I also hear this story that a lot of time, if a family is, unfortunate enough to lose a home, that whoever's buying this would obviously prefer to keep them in as a tenant, and they can still have that, homeowners feel to it. So we hear stories that there's a good match under that scenario.
Yeah, yeah. Well, let's talk a little bit about. I want to talk about, what a lender like you guys, a national lender, and everybody probably would have a similar answer that's at your that's a national and even hard money lenders. But what are you typically looking for in a borrower?
Yeah. So if we obviously want someone who would we consider a worthy borrower, someone with a good credit profile, who has paid their bills on time, who have an income and can demonstrate that they have experience in this field. Now, there's obviously a couple of nuances to that, and a lot of people are worried that we did have a major crisis starting in 2008. So it's very natural that if you've been in real estate during that period, that there can be, I call them scratch and dents on your credit, whether it's a foreclosure or a short sale, that it was something that the borrower didn't have any control over. So rather than just saying, hey, if you have anything or a dent in your credit, then you're not credit worthy. So we take a very careful look and look for reasonable explanation. It doesn't mean that the borrower don't qualify to get a loan or qualify, but it's certainly something that they should be cognizant of and have a good explanation of why that would appear in their credit.
Yeah, and I guess there's always the some lenders say we're purely asset based. Especially some local hard money lenders in any market, they'll say we don't even pull your credit. Like, we don't care. We care more about the asset. But talk about kind of how some lenders care about your credit personally or your financial history versus those that are just purely asset based.
Yeah. So if we use Colony as an example, we certainly want to understand. It's kind of like part of know your borrower. If you deal with deposit institutions such as bank, they certainly are very cognizant of that as well. And then you look to the private lender, who is obviously non-regulated, and it's typically people's own money or they manage other people's money.
Right.
They certainly could be indifferent and say we're purely asset-based, but then you also got to look at the cost of capital. The rates that they're charging is obviously reflective of the risk that they take.
Sure. And I guess the traditional hard money lender is probably a little different than the way I think you guys are structured, where they don't typically offer a line of credit. It's usually transaction to transaction, right? So
Correct.
They can make those decisions to say, hey, if the asset fits this, I'll do it, where you guys would tend to give somebody maybe a large line of credit that says, you can do 5 or 10 deals at a time, right? Or more. Yeah.
Yes, no, absolutely. And that's also where we are giving, our minimum line of credit is $1 million. And I think it's very important for us to understand, notably, what is your experience? Also, pull your credit to see if you've been a good counterpart with other financial institutions. And it's just up to us, probably can offer better or maybe cheaper term that the pure private lender is just looking asset-based. It's part of that process.
Right. In terms of maybe talking a little bit about the asset side, what are you guys looking for there? In terms of, loan to value could be one, but two could be just other things like, you may not want to finance major burnouts or things that are like really heavy rehabs. Of course, paint and carpet has less risk than a major rebuild, right? But in terms of the asset, what do you guys look at, or what are some of the criteria that you evaluate?
Yeah, so if we start with our lines of credit, the majority of those assets are what we call transitional, meaning that there is a fix-up that could be a construction component, or it could just be it's a great buy, so they need to close immediately. But obviously, we understand that certain properties come with some hair on it, or there is a need to reposition that asset, and we take that into consideration, where we typically would say, what is it worth today? And that's what we lend off, not necessarily a future value. And it's just to simplify process, because the only two things that really drives the line of credit is the valuation, which is either BPO or appraisal, and then it's clean title. Those are the only two things that then would drive us funding the loan.
Okay. And
Then
how have things evolved over the past few years? Because it feels like, all of a sudden Uncle Joey's a lender, like all the lenders are, people coming out of the woodwork. And it's just part of the cycle, right? But I think we saw that in the last downturn a year or two before. Lots of new lenders that are coming in that may be, and they're typically the local guys, not national in scope like you, but they're saying they're willing to lend. You see things crazy, like they'll lend a certain percentage of the tax value. Like, what does that have to do with anything? Just weird kind of things that start to happen. I've seen some loans that come out that these are more on the owner side that say, hey, stated income again. Like there's some weird stuff starting to happen again. So where do you think we're at in the kind of evolution here of this industry from the financial side? It's time for a quick announcement. We'll be back to the show in less than 30 seconds. PassiveRental.com is your source for turnkey, done-for-you rental properties. If you'd like to be an investor and not a landlord, please visit PassiveRental.com to learn how to purchase cash-flowing, professionally managed rental properties in the hottest rental markets across the country. We can also help connect you with financing for your next property. Invest the easy way today and get started by visiting PassiveRental.com. Where do you think we're at in the kind of evolution here of this industry from the financial side?
Yeah, I think we welcome new players because obviously competition is great, but it also creates liquidity in this segment, which is going to be key for us to keep on growing. And I think lenders are actively looking to partner up or find good borrowers who's going to be coming back. Because again, if we go back to the line of credit, those loan durations tend to be very short. So we need to keep on putting out loans because we get paid back a lot of the times. Now, if you go to the rental, the stabilized portfolio loans that we do, right, that's obviously a 5 or 10 year duration that we look at. So it's we're looking much closer to them because we need to have a good tenant in there. They can't be any deferred maintenance. So it really just depends on your loan product. But I think the more creative financing tend to probably be local or more regional for the more creative lenders out there.
Okay. And did I hear you right? I think we maybe have talked about this before. When you guys typically lend, do you lend for repairs as well, or you're lending just based on the purchase price of the property?
So we're one of those lenders that just lend on acquisition. Okay. And the reason is it's again the very short loan duration. I think our pricing is also reflecting that we're typically inside, and what I mean by that is our rates are lower than the guys who also do the construction component or the rehab dollars. So it's just, we have more than $1 billion of these lines of credit. So the only way we really can scale it without a massive infrastructure is to kind of keep it simple. So everything we do is just on that acquisition.
Yeah, I know there's a lot of folks that would traditionally borrow hard money or things like that anyway, and they tend to try to fund the repairs themselves. The big reason is to eliminate the hassles of repair draws and paying contractors on time and some of those things that are a little more complicated than just the purchase side of it.
Oh, absolutely. I mean, my point to them is also if their 3-4% is wider on pricing, if you look what it costs you to get that additional construction draw in terms of cost compared to us, the rate is not very favorable to the borrower.
Right. Well, Joakim, I have a kind of question of the week that I wanted to ask you, which actually falls in line with what we talked about a few minutes ago, which was because I think you probably get asked this question all the time, how does bad credit impact the borrower's ability to borrow for a loan through you guys or those that that are at your level? Because there's always some people that have maybe filed bankruptcy, they maybe had some foreclosures, they had some, like you said, some scratch and dents.
Yeah.
How bad does kind of the credit portion of that impact their ability to even get a loan?
I think the key is, and we run into this very often, is talk to the lender up front. If there is something in your credit background, if you flush it out immediately and just say, hey, when you pull my credit, this is going to come up. And a lot of the lenders, not only do they appreciate it, but they can also very quickly say it's a no, or they say, well, what happened? And then if they present a reasonable explanation, I know from our perspective is we can certainly get comfortable. But if we get into it and we've spent money, allocated resources, and then, oh, by the way, I forgot to tell you, that presents a different scenario and a different challenge. So my advice to any borrower is just be upfront, because the lender is going to eventually find out one way or another, unless you're the asset-based lender who don't care about credit profile, etc.
Right. And for guys like you that are looking a little bit more at the person themselves, do you then start to weigh the asset as well to say, well, you got some issues here, but they're buying this at such a good value that it's less risk? I mean, do you start to kind of weigh the person versus the asset, or you have to get past the kind of how you evaluate the person before you even consider looking at an asset?
No, I think we take a very, very hard look at the borrower before we kind of look at the asset, just because not only does it also reflect that the borrower is upfront and honest about it, or that's not to say just because people don't disclose it doesn't mean that they're trying to hide something. It's maybe that they think it doesn't make a difference to us. But we've certainly run into this, and a lot of the times when people have been upfront, I've just said, we probably can't get comfortable, or talk to this lender, or we say, hey, give us a good explanation. We'll run it by credit, and we'll get a sign off. And a lot of the times it turns out in the favor of the borrower because they disclose it upfront.
Sure. And I think with some of the more traditional kind of local hard money lenders, what they might do is just offset risk by increasing rate. I mean, do you do anything like that to say, hey, you're kind of on the fence here, but we're comfortable if we lend at a little bit higher rate? I mean, is that something you consider? Or?
I think we'll if we feel strong enough about the deal, we put what we call credit enhancements around it, and that might be a low LTV, a slightly higher rate, or maybe there's another partner, a sponsor with a better credit that we can say, maybe we'll involve them in the transaction. So it really depends. And again, in my experience, there's just so many different scenarios that exist that it's very hard to set up a cookie cutter process around people's know your customer or their credit background.
Right. And so in this kind of climate where we are in the cycle, it feels like people are, even for ourselves, we feel like generally speaking, we're having to pay a little bit more for deals, and people are starting to justify, well, the market's going up. Especially on the retail side, it feels like there's no end in sight. From the way that you guys evaluate assets now, individual loans you're willing to do on assets, what do you see going on there? Do you feel like it's kind of creeping up to a point to where it starts to get a little less comfortable than maybe it did a couple of years ago?
Now, listen, I'm still bullish on the overall residential industry. A couple of things. If we start, it's still very hard to qualify for owner-occupant homes to get actual mortgages. So that suggests that you don't have the stated income, stated asset, where people are getting in over their head in terms of being able to service debt or pay the monthly mortgage. But then also, it really depends on people's return expectation, because I am located in Florida, where we obviously have had a very, very steep appreciation curve.
Yeah.
And it really just depends on what kind of returns are people looking for, and if they're reasonable, if they believe in meaningful appreciation, then I think they're going to be fine. But there's pockets all over the country that people feel like it's overheated. But I certainly see a lot of other markets where there's still plenty of opportunity for investors.
Sure. Yeah. Well, Joakim, I want to jump into the next part of the show, which is the Taking Action segment. And specifically, I want to talk a little bit more about, in line with the name, Taking Action. I want to talk about how people can take action, because I think there's probably some people listening right now that don't know exactly where to get started, or they're afraid to get started, or they've relied on family money or other things to do a few deals here and there. But they're like, hey, I want to, everybody that gets in this, there's very few that get in this business that are comfortable with just doing a couple deals here and there. Everybody kind of, not everybody, but most people aspire to ramp up their business, and financing is a key portion of that. So let's talk a little bit about what a borrower should do to kind of get started.
Yeah, I mean, I would obviously encourage because there's a bunch of research going into that. Is what is your objective, right? Are you a fix and flip? Are you a buy and hold? What do you want to accomplish? And also be realistic. Everybody would love to buy 1,000 homes a month, but that's probably not realistic. So what are your short-term, medium, and long-term goals? Then find out what kind of capital is available in that market, whether it's a national lender like us, or it's a local bank, or it's a local hard money guy. So
Sure.
I think there's a tremendous amount of information available. And one of the things I do think that Flipnerd is doing is they're a great content provider. So there's a tremendous amount of information available on social media, such as the Flipnerd.
Yep.
So I think, there's
we've got the best information. I don't know.
Absolutely,
top. Cream of the crop.
That's right. But it is true that where you educate yourself is where these sites exist to provide good content, and whether it's lenders, whether it's vendors, whatever you're looking for. But there's research going into it, and then call the people. All of them have loan officers, salespeople who can answer questions, and obviously be comfortable. If there's something you're not clear about, then there's great chat rooms where you can go and ask people about people's experience. Because again, we all have different experience with different lenders, so it's important that if you're going to partner up, because I view it as a partnership. The lender takes as much risk as the borrower, so it is partnerships that you are forming, and then identify the partner that you think can help you grow the business.
Yeah. What do you think about? So I know in the past, like one thing that a lot of people learned during the last downturn was to not have all your eggs in one basket with too few lenders, right? There are some people that had, $2, $3, $4 million line of credit that was more than enough for what they needed, and that one lender made a call and said, "Hey, sorry, we're pulling your line of credit, and we need you to sell your assets because we're going to call these or whatever." But then there's always this balance of, well, it's easy right now to go. It's typically pretty easy to get financing right now, more so than it has been in many years past. But you don't want to have so many lenders that you're not utilizing your line with them to where you're kind of not important to them and they're not that important to you. So what's the right balance of having, a couple of, not having all your eggs in one basket, but also not disappointing that person to where they don't want to renew your line when it's up because you're not using it anyway?
Yeah, and I mean that's also from a lender's perspective a matter of resources, because it's not just putting a line in place; it's actually the infrastructure, having the ability to fund.
Sure.
And then lenders vary in terms of their ability to execute, and at least in the fix and flip space where people get great buys, it is very, very important that they can deliver on time. So it's almost like even if you were having an equity partner, that you pick the right lender that you're comfortable with and believe that they can execute. Sure.
And how about lenders with, traditional hard money lender isn't funding long-term holds, right? They're just a bridge line. They're short-term fix and flip. And talk about the importance. I know you guys do both, right?
Yes. Correct.
Yeah. So for those that, I guess with you or some of the larger lenders like you, are they typically still just dealing with one person? I mean, will somebody have a kind of a representative that, hey, I need to fund this fix and flip, or I'm looking to keep this one as a rental? Is that typically how you're set up?
Yeah, so you typically have a one point of contact, which I think you should, if you're dealing with the same lender, just because they know you, they know how you execute. They can typically solve issues. But from our perspective is we have a bridge team, we have a perm team, and then we recently launched what we call our single asset program, meaning that we actually finance one rental home and it's 30-year term. So it just depends on what bucket. And obviously, as lenders, we almost become advisors as well, because as people are growing that business, I think a lot of at least within our organization, is these guys have dealt with multiple borrowers on all different sizes. So we can likely offer very good advice on how to help to grow that business, make meaningful returns, introductions to other vendors or property managers. So it's almost, again, I view lenders oftentimes as partners as well.
Yeah, I think that's one thing that I've learned over the years. Is historically, some people looked at their lender as a necessary evil, right? But I think the one thing that is, generally speaking, your lender wants to do deals. So if they're telling you not to do something, you probably should listen.
Yes,
right?
No, listen. And again, we all motivated to lend money, but also, as you said, if somebody says, that doesn't make a lot of sense, at least pay attention, right?
Right.
There might be something to it. Not that lenders are always right, but it's something you should pay attention to.
So along those lines, what should a borrower look for in a lender? You said on one hand, if you consider that person a partner, that's going to help keep you safe and give you some guidance.
Yeah.
there's other things that a lender can provide to you, but what are some of the things that a borrower I'm in Dallas, or let's say you're any town USA, and you want to do some deals, what should you be looking for in terms of a lender partner?
I mean, think about it is how long they've been around. We pride ourselves at Colony to be 100% transparent, whether it's good news or bad news. We deliver it up front because, again, I keep on going back to the word partnership is we take as much risk, and therefore there's certain things we can and cannot accommodate, and then we should be upfront telling the borrower we can do it. Just like I said with the credit issue is, hey, if there's an issue that, if we can't close the loan, why keep the borrower around or say this we can't do, there's a much better lender, or just be open and honest, just like we would expect in any good partnership.
Sure. And would you say, what do you think so in the time you've been doing this, do you see more people? This is like a totally random question, but I'm meeting more and more people that are investing in multiple markets. Like they used to just operate in one market. Now they're in other markets. Now, some of what's maybe facilitated that is technology, right? Technology is very, you can be somewhere without being there. I mean, we're thousands of miles apart right now and we're talking. So you could just as well be walking me around the house, showing me, plumbing issues or whatever. But there's also the rise of kind of institutional or national lenders that are a little bit more agnostic to where you're doing deals, more so than like a local hard money lender. But are you seeing more of that national kind of partners, lending partners and things like that are helping facilitate investors being more agnostic to where they invest at?
Yes, no, we do see that. And so a couple of things is obviously, I think, from an investment perspective, diversification is always good. Then there's also, as we touched on earlier, where there's just not a lot of good buying opportunities for an investor. And there's still other, the U.S. is a very, very large country. So there's other cities or states where people are seeing attractive returns, where they can get great returns. But most lenders, especially the national guys like us, want to know what infrastructure do you have? How do you source your deal? What do you intend to do with the property? Not just let someone run into a new market without, just because they hear there's great returns. So we certainly want to do our homework and get a comfort level that these guys can be able to execute.
Yeah. I think, I've seen some people that probably get into trouble too. They assume that they can, I've been doing it here for a long time, so I'm just going to pick up and go do it over there. And there's some complications with that. Yeah, for sure.
I mean, one of the things I think that's also interesting is, you talk about kind of buying on the steps, the foreclosure. Like we differentiate between different states where it's a judicial foreclosure state or non-judicial foreclosure state, and it's certainly something where you have local law or legislation that you're not necessarily cognizant of in your local market, but if you go into a new market, it's a completely different animal that you have to know how to tackle.
Yeah. Well, Joakim, what have we missed today? And we talked about a lot of stuff here, but what have we missed that listeners that are looking to borrow should consider that maybe we haven't covered yet?
I don't know. I mean, my view is that as people get smart about not only real estate and financing is truly utilize the tools that's online, because I think people can educate themselves very, very well. And by the time they call, a couple of lenders to kind of feel them out, they have a bunch of good questions to ask for them to get a comfort level with that lender and see if they fulfill their investment needs and objectives that investor has set out for themselves. But it's hard to tell, because just like anything else is people have different trigger points that's important to them. So research is going to be key to me to pick the right lender.
Sure. Thank you. And you kind of mentioned earlier that you're pretty bullish on where the market's at still. You want to kind of elaborate on that a little bit, like where you see things going over the next few years even?
I mean, if you look at the household formation, I do believe that the U.S. still have a positive population growth of about 125,000 people a month. So if you look at that, the housing shortage and just overall population growth, economic growth, I think the future looks pretty bright, at least for residential real estate investors. And also to that point is that if you're talking about liquidity, which is important to most investors, is single family homes or residential assets still is considered the most liquid real estate asset that you could actually own.
Yeah. Yeah, and do you think, like obviously there's been a growth, obviously the vacancy rates or home ownership rates have declined in recent years, right? Which it kind of is taking more and more houses off the market. I mean, it's kind of putting pressure on demand, right? For those that are looking to resell,
Yeah,
right?
no, absolutely.
Yeah.
It's again. I'm in South Florida. You know, it's a very it's a seller's market right now. That's for sure. Everybody wants to buy. Rates are still very attractive, low, and which makes for a affordability component to owner occupants, but also I think in the investment community, rates are also still very attractive from a historical perspective.
Sure. Awesome. Well, Joakim, if folks want to learn more about you or about Colony, where do they go?
Yeah, so they're online. ColonyAmericanFinance.com is obviously you can either reach out to us via the internet, or there's 800 numbers. We got a very dedicated staff, and expect either to pick up the phone when you call, or within a few hours you should get a call back. Or as I said, people are always willing to reach out to me directly if they want to chat. So we would welcome any questions, and people want to learn about us. We're here and we're ready to talk to everybody.
Sounds good. Well, hey, thanks so much for your time today. Great to see you again.
Mike, it was great to see you as well. I really appreciate you inviting me back.
Absolutely. Thanks for being here. And everybody that's listening in, thanks for joining us today. This is, I have to look it up. It's been so many, show number 318. So if you have not watched all 318 yet, you're going to have a busy week ahead. So hopefully you go check out some more shows. So everybody, thanks for joining us. Joakim, thanks again. Have a great day, my friend.
Thank you, Mike.
All righty. Bye-bye. Thanks for joining us for this episode of the FlipNerd.com Investing Show. If you're not yet an elite member of FlipNerd, you're missing out. We have tons of great training, including a new detailed masterclass published each month and live training webinars with experts twice a month. Plus, you'll get access to all of our archives, where we already have a growing library of masterclasses and other training videos. Elite members also get membership in our incredible online mastermind group, where many of the top real estate investors from across the country, including many of the hundreds of guests I've had on the show in the past, are already members. Whether you're brand new, looking to get started, or a veteran, you simply must join today. I promise you won't be disappointed. To learn more or join today, please visit flipnerd.com/lab. That's flipnerd.com/lab. See you on the next show.